If you're on Social Security or Medicare right now, I need you to stay with me until the end of this video, because what I'm about to share could save you hundreds, and in some cases thousands, of dollars every single year. And I mean real money, not the kind of savings where you clip coupons and feel good about 50 cents off a can of soup. I'm talking about major recurring bills that you are paying every single month, that you legally do not have to pay at all. Here's what most people never find out. A huge number of American seniors are quietly overpaying on bills that the government is supposed to cover for them. The catch isn't the rules. The catch is that millions of people who qualify never apply. Not because they did anything wrong. Not because they don't qualify. Just because nobody ever told them these programs exist. I went through federal law, Medicare guidelines, and the actual 2026 program rules, the current income limits, and the exact forms involved. And I found 5 specific bills that millions of seniors are paying right now when they legally don't have to. I'll walk through each one, tell you exactly who qualifies, what the numbers look like in 2026, and what to do about it today. Stick around for the 4th one especially, because it involves a Medicare charge that blindsides retirees almost every single year for a reason that often has nothing to do with what they currently earn. That one alone is worth watching to the end. Real quick before we get into it, if you're not subscribed yet, hit that button right now and turn on notifications. The rules around Medicare and Social Security change every single year. Income limits shift, new programs open up, old ones get updated. I cover all of that in plain English, so you always know what you're actually entitled to before it's too late to act on it. The people who are subscribed stay ahead of this stuff. The people who aren't tend to find out too late. So subscribe now, and let's get into it. Bill 1. Your Medicare Part B premium. The standard amount in 2026 is $202.90 a month. And for most people, it comes straight out of the Social Security deposit before you ever even see it. Most people just accept it, never question it, never look into whether it has to be that way. What they don't know is that there are federal programs called Medicare Savings Programs that will pay that premium for you, completely, every single month, through your state Medicaid office. There are 3 tiers depending on your income level, and the most comprehensive one is called QMB, which stands for Qualified Medicare Beneficiary. It doesn't just cover the Part B premium. It covers your deductibles, your copayments, your coinsurance, basically everything Medicare would normally ask you to pay out of pocket, gone, covered by the state on your behalf. And here's the part that matters. The 2026 IRMAA income brackets show that the standard Part B premium applies to beneficiaries with income at or under $109,000 for single filers. But for QMB specifically, the threshold is much lower and much more accessible. If you're single with a monthly income under roughly $1,350 or under $1,824 as a married couple, you very likely qualify for QMB right now. If your income runs a little above that, there are 2 more tiers, SLMB and QI, that extend the income window further. They don't cover everything QMB does, but they will eliminate that $202.90 charge completely, which adds up to more than $2,400 back in your pocket over a year. None of this happens automatically, though. You have to apply through your state Medicaid office, and the fastest way to find that office is calling 1-800-MEDICARE or visiting medicare.gov. Bill 2 is what you're paying at the pharmacy counter. Having Part D coverage doesn't mean your prescriptions are actually affordable, and a lot of retirees learn that the hard way standing at checkout. There's a federal program called Extra Help, also known as the Low Income Subsidy, and if you qualify, the entire structure of what you pay changes overnight. In 2026, Extra Help covers most Part D premiums, eliminates the deductible, and caps copayments at a few dollars per prescription. Specifically, your Part D premium and deductible are covered, and per prescription copays are capped at $5.10 for generics and $12.65 for brand name drugs in 2026. Compare that to the $60, $90, sometimes well over $100 a month people are paying for a single medication without this help, and you start to see just how much is quietly being left on the table. SSA estimates that Extra Help has an average annual value of $5,700 per person. The 2026 income limit is $23,475 per year for individuals and $31,725 per year for married couples, figures that represent 150% of the federal poverty level. And here's a detail worth knowing that saves people a second trip. If you are enrolled in a Medicare Savings Program such as QMB, SLMB, or QI, you automatically qualify for extra help. You do not need to apply separately. Nothing extra to fill out, it simply kicks in. If you haven't applied to either program yet, you can do it directly through Social Security at ssa.gov or by calling 1-800-772-1213. Bill 3 is your heating and cooling bill. If your utility costs have felt brutal lately, you are not imagining it. There's a program called LIHEAP, the Low Income Home Energy Assistance Program, and it does something most people don't expect from a government benefit. The benefit is usually paid directly to your utility company or fuel provider, not to you personally. Not a discount code, not a coupon, an actual payment applied straight to your account balance. The LIHEAP statute established 150% of the poverty guidelines as the maximum income level allowed in determining LIHEAP eligibility. At 150% FPL, that works out to approximately $23,940 for a one-person household. Though your specific state may set its own threshold, so always verify locally. And if you're 60 or older, most states allow households that include a person over the age of 60 to apply a month in advance, which guarantees seniors priority. That genuinely matters because annual LIHEAP fund allocations are finite. Once they run out, they run out. Qualifying for LIHEAP may also automatically make a household eligible for the Weatherization Assistance Program, which helps by providing insulation, replacing broken windows, and fixing or replacing heaters and furnaces at no charge to you, which lowers your bills permanently going forward, not just for one season. And don't assume this is only a winter program if you live somewhere hot. In hot weather states like Arizona, LIHEAP is year-round. To get connected, dial 211, the National Social Services line, and they'll route you directly to your local LIHEAP office. Now, before I get to Bill 4, the one I told you to stay for, I want to pause for a second. Drop a comment below and tell me which of these programs you've actually heard of before today. Most people watching this will say 1, maybe 2, and that's exactly the problem. These programs are sitting on government websites right now, fully funded, waiting for applications that never come. If this is opening your eyes, share it with someone on Medicare who needs to see it. That one share could genuinely be worth thousands of dollars to them this year. All right, Bill 4. Bill 4 is the IRMAA surcharge, and this is the one that genuinely blindsides people. IRMAA stands for Income-Related Monthly Adjustment Amount. For 2026, the IRMAA surcharge applies to beneficiaries with income exceeding $109,000 for single filers or $218,000 for joint filers. When it kicks in, your Part B premium doesn't stay at $202.90. For those beneficiaries, total monthly Part B premiums range from $284.10 to $689.90. That extra charge comes straight out of your Social Security check before you ever see the deposit. Here's the part that makes this genuinely unfair for a lot of retirees. The surcharge is based on your modified adjusted gross income from 2 years ago, meaning your 2026 IRMAA liability is based on your MAGI from 2024. So if you've since retired, lost a spouse, reduced your work hours, or had any major drop in income, you could be paying a hefty surcharge today based on income that simply isn't your reality anymore. And there's something else about how this surcharge works that almost nobody realizes. This is a cliff surcharge. Just $1 over the limit will trigger surcharges for both Parts B and D. Once your MAGI exceeds a threshold, the full surcharge for that bracket applies to your premium, not just the amount over the threshold. That means someone at $109,001 pays the exact same surcharge as someone at $150,000, while someone at $108,999 pays nothing extra at all. The whole bracket, triggered by a single dollar. The fix is a specific form called SSA-44. The SSA allows IRMAA appeals, formerly called life-changing event requests, using Form SSA-44 when a qualifying event causes income to drop significantly. The qualifying events SSA recognizes include work stoppage, work reduction, marriage, divorce, death of a spouse, loss of a pension, loss of income-producing property due to disaster, fraud, or theft, and employer settlement payments. One important clarification here: a Roth conversion or a home sale on its own doesn't qualify. But if that event happened as a direct result of one of those life changes, like selling a business as part of retiring, it can be included. This is one of the most underutilized planning tools. Many people don't file the appeal because they don't realize it exists or assume it won't be approved. But the approval rate for legitimate life-changing events is high. People routinely get $200, $300, $400 a month back this way. You can get Form SSA-44 at ssa.gov or from any Social Security office. And Bill 5 is your property tax bill. If you're a homeowner 65 or older, ask yourself honestly, has your county ever proactively told you about senior exemptions available to you? For nearly everyone watching this, the answer is no. And yet almost every state runs some version of these programs: senior exemptions, tax freezes, circuit breaker credits that reduce your home's taxable value, lock your bill so it legally cannot keep climbing, or eliminate a meaningful chunk of it outright. The savings range from a few $100s to several thousand a year, depending on where you live and which program applies. One thing worth knowing here: there's a difference between an exemption and a deferral, and roughly 18 states offer both. An exemption reduces or eliminates what you owe. A deferral is a completely different animal. The state pays the bill for you and places a lien on the house, repaid with interest when you sell or when you die. It's a loan, not free money, and it's worth understanding which one you're applying for before you sign anything. As always, the catch is identical to everything else on this list. Nobody applies it for you automatically. Search your county's name along with Senior Property Tax Exemption 2026, or simply call your county assessor's office directly and ask what's currently available for seniors. It's one phone call, and once it's on file, the savings renew automatically every single year you continue to live in that home. So here's the full picture, laid out plainly. The $202.90 Part B premium that Medicare Savings Programs can erase completely for qualifying seniors. Prescription costs that extra help brings down to just $5.10 for generics, and $12.65 for brand-name drugs per prescription. Energy bills that LIHEAP pays straight to your utility company on your behalf. The IRMAA surcharge that Form SSA-44 can shrink or eliminate if a qualifying life-changing event has reduced your income since the year Medicare is using. And property taxes, where senior relief exists in nearly every state, but only ever kicks in once you file the paperwork yourself. Every single one of these programs is real, fully funded, and currently active right now in 2026. The only thing standing between you and the savings is one phone call or one short form. Millions of people who qualify never apply. CMS data shows about 12.5 million Part D enrollees in extra help, but the agency estimates another 2 to 3 million people qualify and either don't know it or never filed. That's just one program. Multiply that across all 5, and the number of seniors leaving money on the table every single month is staggering. If this video helped you, subscribe right now and hit the notification bell so you never miss an update when these income limits change. Then send this to someone on Medicare or Social Security who needs to see it. A parent, a neighbor, a friend down the street. None of these programs are going to call you, mail you a reminder, or sign you up on your behalf. That part is entirely on you. But now you know exactly where to look, and it could genuinely be worth thousands of dollars to them this year alone. I'll see you in the next one.